Your boss spends $5,900 a month on you. You keep $3,600, $2,300 gone. And your boss doesn't keep a single cent of it. Most of it never even shows up on your payslip. So who's taking it? Some of it you'd guess. Some of it you wouldn't. Like a fund you can't touch for 40 years. And one piece isn't being taken at all. It's still yours. Almost nobody notices. Meet Sarah. She earns $5,000 a month. She has never once read her payslip. By the end of this, you'll know where every dollar of it goes, and the one line on that payslip you can actually change. Because your $5,000 doesn't arrive as $5,000. It arrives as whatever survives 6 lines nobody reads. Gross is what you earned. Net is what's left. 6 lines sit between those two numbers. Quick note, these are example numbers from one typical salary. If you're outside the US, the names change. The shape doesn't. Line 1, the biggest, income tax. $370. Gone. And here's the first thing almost everyone gets wrong. You've probably been told you're in the 12% bracket. So you assume 12% of everything comes out. It doesn't. Because a tax bracket isn't a rate on your salary. It's a rate on a slice of it. Think of your income as water filling buckets. The first bucket is free. That's the standard deduction. A chunk of your income nobody taxes at all. Only when that bucket overflows does the next one start filling. The second bucket is taxed at 10%, and only what overflows into the third gets taxed at 12%. So the 12% never touched most of your money. It only touched the top slice, which is why the rate that actually leaves is under 8%, not 12%. The 12% is your marginal rate, what your last dollar pays. The 8% is your effective rate, what your whole salary actually pays. And people confuse them constantly, which leads to one of the most expensive myths in personal finance. You've heard someone say it. I turned down a raise. It would push me into a higher bracket. That is not how it works. A raise never makes you poorer. Only the dollars above the line get the higher rate. Every dollar below it keeps the rate it always had. So take the raise. Always. Now, where does that $370 actually go? Roads, defense, schools, hospitals, courts, the people who answer when you call for help. You can argue about whether it's spent well. That's a different video. But it isn't vanishing. It's buying something. $370 gone, which leaves $4,630. And we've read exactly one line. Piece 2. This one leaves fast, and you cannot opt out. Social Security. $300 a month. 6.2% of what you earn. No deduction. No bracket. No escape. And then Medicare. Another $70. 1.45%. Together they have a name on your payslip. FICA. $370. And it's the line people resent most, because it feels like money thrown into a hole. It isn't a hole. It's a pipe. Your Social Security money isn't sitting in an account with your name on it. It's being paid out right now, to someone's grandmother, to a disabled worker who can't earn, to a widow raising 2 kids alone. Today's workers pay today's retirees. Your $300 left this month. It's already spent. And one day, the workers after you will pay for you. It's a chain, not a vault, which is why the arithmetic matters. When there are lots of workers per retiree, the chain is easy. When there are fewer, it strains. That's the whole reason you keep hearing arguments about it. Not because the money vanished, because the maths is getting harder. So that $370 a month isn't a tax on you exactly. It's a promise, funded by the next person in line. Whether that promise holds is the argument. $300 to Social Security, $70 to Medicare, $4,260 left. Piece 3, and this one depends entirely on a line on a map. State income tax, $270, or nothing at all. or nearly double that. Same job, same salary, same work, different line on a map. This is the single biggest variable on your payslip. Some states take zero, and people love to point at that. But here's what they leave out. A state still has to pay for roads and schools. If it doesn't take income tax, it takes it somewhere else. Higher property tax, higher sales tax on everything you buy, higher fees, tolls, registrations. The money finds a way out. It just changes doors. So no income tax doesn't mean cheap. It means the bill has a different name. 270 gone, 3,990 left. Piece 4. And you're paying this one whether you use it or not. Health insurance. $140 a month. And this line is different from every other one so far, because it isn't a tax. You're buying something. A promise that if something terrible happens, you won't lose everything you own paying for it. Most months, you get nothing. You pay, you stay healthy, the money's gone. And it feels like waste. Then one day it isn't. One accident, one diagnosis, a bill that would have taken years to pay. That's what the 140 was buying. Not treatment. Protection against one bad week. But here's the part that will annoy you. That 140 isn't the price of your insurance. It's your share of it. Your employer is quietly paying a much bigger share beside you, often 3 or 4 times more. Remember that. It comes back at the end, and it changes everything. 3,850 left. One line to go. And it's the one that isn't a cost at all. Your 401k, $250. It leaves your paycheck exactly like the others. Same column, same minus sign, which is why your brain files it as money lost. It isn't. And this is the line I told you that you could change. That 250 didn't leave. It moved from a pocket you spend from into a pocket you own. It's still yours, every cent. And it doesn't sit still. It's invested, and it grows while you sleep. But that's only half of what that jar did this month because of where it sits on the payslip. It came out before the tax was calculated, which means the government never saw it. Your tax bill was smaller because that money was already gone. Without it, you'd have paid $400 in federal tax. With it, you paid $370. So you saved $250, and it only cost you $220. Which means the real number that left your life this month wasn't $1,400. It was $1,150. And if your employer matches what you put in, they hand you free money for saving your own. The only guaranteed return you'll ever be offered. Turning that down is the most expensive thing on this entire payslip. Now, let's add it all up. $370 to income tax, $300 to Social Security, $70 to Medicare, $270 to the state, $140 to health insurance, $250 into your own jar, $1,400 spoken for, which leaves $3,600. That's what lands. That's what's real. 72 cents of every dollar you earned. And most people stop the story right here. Salary $5,000. Take home $3,600. Done. But that's the wrong ending, because there's a number we haven't looked at once. It isn't on your payslip. It isn't in your contract. Almost no employee ever sees it. And it's bigger than your salary. Everything so far went one direction, down. 5,000, shrinking to 3,600. Now go the other way. Not down from your salary, up from it. Because when your employer pays you 5,000, 5,000 is not what you cost them. Remember that FICA line, the 370? Your employer pays that same amount again, matched, dollar for dollar, on top of your wage. You never see it. It never touches your payslip. Then the health insurance you only paid a share of. Their share is around $500. Then unemployment insurance, in case they ever let you go, another 40 or so. Add it up, and you don't cost 5,000. You cost about 5,900. So look at the real journey. Your employer spends 5,900. You keep $3,600, $2,300 disappear between those two people. You keep 61 cents of every dollar you actually cost. And it isn't your boss pocketing it. Most of it never touches them either. It's the cost of employing a human being, and you were never shown the bill. So now you can answer the question you started with. Where did the $1,400 go? A slice to the country. A slice to the people who came before you. A slice to your state. A slice to your worst possible week. And a slice straight into your own pocket, wearing a disguise. So here's what to actually do with this. 1. Open your payslip this month. Actually, open it. Find the 6 lines. Now you know what every one of them means. 2. If your employer offers a match and you're not taking it, you are turning down a raise you already earned. 3. If you get a big refund every spring, that isn't a gift. It's your own money, returned late, with no interest. You can change that with one form at work. And 4, the one that's worth real money. The next time you negotiate, you're not asking about $5,000. You're talking about $5,900, because that's the number they're actually deciding. Your $5,000 never disappeared. It split country, retirees, state, protection, and a jar with your name on it. Money never vanishes. It always goes somewhere. So tell me below, what's your gross, and how much actually lands?